think a lot of DePIN projects or Web3 AI projects, it's kind of like a focus on how many nodes they have, how the capacity, all that stuff, and then it's like, okay, now let's go to market. But really, like, in order not to waste your time, not to waste investor money, like figure out, even if you don't have the functionality, right? It's running on centralized infrastructure, but we plan to decentralize over time, and people actually use it. Like that's a lot more compelling than something that's absolutely decentralized from day one. You got to answer the why. Like, why are we building this? And it seems really obvious, but not enough people can articulate that. And also, kind of on the DePIN side, which on the Web3 AI side of things, why will people change their behavior to use it? Right? We're creatures of habit.
Yes.
We all complain about Google, yet we still use Gmail. We all complain about Twitter, but so for us to change our behaviors, there's got to be like a compelling reason.
Mm-hmm.
And 99.9% of people don't care about decentralization, probably don't even get it. But it's kind of the implications of the decentralization, whether it's provable, security and privacy, or there are a lot of siloed, the large internet companies or tech companies are all siloed, and so they all want to build their own platform of their own kind of chatbot that takes, like Microsoft wants a Microsoft Office.
Hey everyone, welcome to another conversation on NEWFORUM, the research network for open learning in the arts and sciences, pioneering a new culture for internet design. Today we're joined by David, head of Web3 investments at M31 Capital, to explore how Web3 and AI are converging to reshape the new internet. We'll discuss their advantages, real-world use cases, investment trends, and the future of this exciting ecosystem. David, welcome to this episode of NEWFORUM, and I cannot wait to hear more about yourself, your background, and how you fell down the Web3 rabbit hole.
Oh, thanks for having me on. Excited for this conversation. I can get into my background and how I got to this podcast. But I actually started my career in traditional finance. I spent 10 years across banking, private equity, hedge fund world, covering technology companies, but specifically networking infrastructure. So that was kind of my lens in which I got interested in Bitcoin and crypto in 2014. More than anything else, I saw it as disruptive technology to data networking, and started to kind of think about all of the advantages that these decentralized systems, which can be run any kind of thing on top, could kind of disrupt the status quo. There are a lot of issues with centralized infrastructure, and we can get into that. But that was kind of the light bulb moment for me. And from that moment on, kind of invested on my own, researched on my own, but still had my day job. It wasn't until DeFi summer of 2020 I kind of saw the industry as more real. You had this explosion in creativity and ideas, but also you had metrics, you had revenue, you had a lot of numbers that traditional finance investors look at. And so kind of taking those frameworks, both from early stage investing, also from hedge fund kind of portfolio management, kind of creating this hybrid approach to liquid tokens. And so that's how that was the idea for Omnichain Capital, which was a liquid token fund that I launched in early 2021 and ran for 3 years. I call it Liquid Venture. It was a portfolio of 15 to 20 names. but really thinking about 5 to 10 years out, kind of the bigger picture, long term, rather than trading or trying to predict catalysts in the next month or quarter. And so it was very much like a hybrid strategy, and had success, but wanted to get bigger, and so was looking to kind of partner with a larger platform. M31 actually found me. They read some of my research, figured that we had a lot in common in both, what we were interested in, what part of the stack, a lot of infrastructure, middleware type projects, as well as this long-term mindset, which unfortunately is kind of rare in this industry. And so ended up merging with them at the end of last year, and have kind of taken over both the liquid and illiquid investment operations. But same kind of strategy, same philosophy. Taking TradFi learnings and applying them to this technology, overlaying it with kind of this Web2 networking infrastructure, background that I have, and kind of using that as my guide to, kind of mapping out how the Web3 stack is likely to evolve, what has staying power with network effects, what will likely get commoditized, and why. And that's kind of how I look at the market and make decisions.
Mm-hmm. So I'm curious, like, what is one thing that you would say co-founding OmniChain Capital has sort of like influenced or shaped your approach today?
Yeah, it's a good question. I think, yeah, a couple things. I come from a TradFi world where, at banking, we couldn't get on our Facebook account. We couldn't get on our Gmail. We definitely couldn't tweet about anything related to work. And, a lot of the TradFi accounts today are anonymous because, because it's still like that. And so what was refreshing, but also surprising to me, was the kind of like the importance of getting yourself out there and marketing, but also just connecting with other investors, other builders, and putting ideas out there. Hedge funds are always are notoriously very secretive about their investments and their theses. Private equity, those deals are private, so you can't really talk about them. And so this more of this open kind of collaborative environment was I had never tweeted before, so I had to start tweeting, but also the importance of kind of putting your research out there, putting your ideas out there. You kind of attract similar like-minded people, and that opens a lot of doors. And so that's definitely something. Coming from TradFi, it's just kind of thinking about returns, the investment. That's all really matters. But there are a lot of ways to kind of enhance returns through kind of your being hands-on and having that network that really grows from just like putting your ideas out there.
Amazing. I think that one big thing is putting yourself out there. Yeah, it's not always so easy, especially
No, the first one's hard. First
it,
couple tweets.
it is definitely, but it is super important. So let's dive right into the conversation about Web3 and AI. And I'm curious if you could break down the core component of the Web3 and AI tech stack, and why this combination is so compelling for the future of the new internet.
Yeah, and so coming back to kind of my original thesis on Web3, which was kind of disruptive technology to data networking. And if you think about it, everything that has become digitized, which is almost everything,
Mhm.
is runs on a data network. From computer networks to telecom, internet, private networks within organizations, public cloud that powers most of the websites that we use and applications that we use. If you really think about it, it's kind of everything that could be impacted by this. And AI, the generative AI kind of breakthrough, if you will, with Transformers in 2017, kind of ChatGPT a couple of years ago. That's to me disruptive technology and data processing. And so, naturally those two go hand in hand and kind of, the cliche 1+1 = 3. So that's kind of like big picture, how I think about it. I think there are a lot of ways in which the two technologies overlap. And I guess, there are ways that AI enhances, can enhance blockchain, that can be anywhere from kind of the interface in which we interact with blockchain applications. It's still very complex and kind of intimidating, especially for new users. And so to the extent you can create a natural language interface that abstracts away everything and just gives you a nice, clean chat that gets you access to whatever exchanges, both centralized and decentralized, and how to onboard fiat, all that stuff. So kind of just improving UI UX, as well as kind of on the kind of further down on the stack, called middleware, or maybe even a little lower, but powering smart contracts, or kind of supplementing smart contract capability with off-chain LLM or any other AI kind of processing power. So this is generally called co-processing when you have kind of general compute off-chain, but so that can be CPU, GPU, could be running a database, what have you, something that can't be run on smart contracts that are purposely kind of light, so they can be duplicated. And then you verify it, and it becomes trustless, and it basically retains the same exact characteristics of a smart contract on chain. And so you take that a step further, and you add kind of the capabilities of AI, so AI co-processors, and then you can really supercharge the depth and the context to which smart contracts can execute, while staying trustless, permissionless, all of that, all those characteristics that make Web3 unique. And so that's definitely a big place as well. And then in terms of using blockchain for AI, I think there have been a lot of kind of how much time do we have? But a lot of kind of issue of the early issues that have popped up, in the Web2 AI space, kind of like deep fakes, training, the opacity of the models. Is it biased? Did it use IP protected data? And what's another one? I mean, there are a lot of other ones, and so there are definitely ways in which you can use blockchain to create digital scarcity, which is needed in a future of AI, when we won't be able to tell if I'm AI right now, which is, we're probably not that far away from that.
Right.
I mean, am I AI? I don't know.
Oh, now
but,
you're okay.
but so and then in terms of auditing the data that trained a model, there are a lot of projects working on that, and you can kind of provably verify all your findings on chain, and prove stuff wasn't tampered with, etc. So definitely a lot of opportunities for using each technology to enhance something on the other side.
Mm-hmm. So do you think, because when you mentioned blockchain, I can help but think about decentralized AI, or the decentralization of AI. And I'd like to know from you, what do you think are the key differences between centralized AI and decentralized AI? And I mean, and is it even possible for us to achieve this idea of a decentralized AI?
So I will. I think that a good way to kind of answer that
Mhm.
is, I've been digging into Apple Intelligence, and so Apple's AI offering that they now have on their iPhone, and they had a big announcement in June of this year, and then they've been slowly rolling it out for iPhone 16. But what's very interesting is, data privacy. So something that runs on your phone, it can stay encrypted, and as long as you have access to your phone and don't lose it, it's pretty safe.
Mhm.
the problem with adding AI to phones, to devices, and this can be extrapolated to anything, is that it requires too much compute to run just on your phone. And so a lot of the functions will require cloud computing to supplement that compute power. And the issue with that is the public cloud is very unsafe. And so we want AI to be useful, we want AI to be valuable, and AI is only as valuable as its context it has. And so because ChatGPT is pretty cool, but it's a lot cooler when you feed it data, when you feed it white papers, and you tell it to specifically analyze this or whatever. And the same for kind of like personal assistants. They're going to need to know. They're going to have access to your identity and be able to kind of verify that they are acting on my behalf. So kind of like identification data, health information if you want it monitoring your internals, or maybe giving you, I don't know, a regimen of diet to eat and exercise, and same thing kind of on the financial data. If you want to go out and purchase milk when it's, I don't know why I always think of that example, but when your fridge kind of notices that it's low, or automating trading is kind of an obvious one. But also having an agent go out there and build something for you, maybe like a website or an application. It's going to need to buy resources, and this is also kind of where Web3 kind of has an advantage. But basically, all that data is very sensitive and very valuable, and so you need it to be both confidential, so private, and provably secure. And so what Apple is doing is they built their own cloud, basically, because they're like they admit kind of the Web3 thesis, like the current cloud is not close to being able to handle this in a way that makes sense for for the applications we want to run. And so they announced what was it called? Private Cloud Compute, I think is what they call it, PCC. And then if you dive deep into what PCC is, it's very interesting. It's basically a cloud run on TEEs, trusted execution environments, which have gained a lot of momentum this year in the Web3 space. And kind of combining that, they go through their reasoning. It's like we need to be publicly transparent. You can verify that it wasn't tampered with. It's the right software. That there wasn't a breach. The confidentiality comes with the TEE. And then they put it on a mutable ledger. They literally call it like an immutable ledger for anyone to kind of audit, for security researchers and the like. The problem is that immutable ledger is run by Apple, so you kind of lose all of those characteristics with that one piece of information. But what's really interesting is that a lot of Web3 projects are doing exactly this for exactly that reason. And it's not necessarily AI on blockchain, which really doesn't make sense, but orchestrating these networks.
Why doesn't it make sense? AI on blockchain.
Well, I think running a model as a smart contract doesn't make sense.
Okay.
So you can run it. I mean, it depends your definition of on-chain, right? Because you can run something like in a coprocessor, technically off-chain. It gets verified, but that output gets then taken on-chain into that system. And so is that on-chain AI? Like, I guess so. But I mean, like the computation, and a lot of the heavy-duty stuff you're going to want it to be off-chain. And so it's still verifiable, of course, but so you kind of have a blockchain orchestrated network of cloud resources, and so there's no single point of failure, which Apple repeatedly talks about in its paper about this, which is really interesting. They basically point out all the things that we've been kind of preaching for years in Web3. All those characteristics, except the immutable ledger is actually an immutable ledger on a public blockchain. And so to me, that's kind of, it validates the entire Web3 thesis that centralized systems are broken. You can go into all these data breaches, but both in the private sector and also in government, like our federal government data files have been hacked. Our in the U.S. and our telecom infrastructure has been hacked by China. I think it's still ongoing, and so you really need to decentralization and using smart contracts to orchestrate and kind of organize these resources, whether it's compute or on the communication side, really is the only way to get to a privacy level that will make sense for AI, which will, because AI requires more and more of our sensitive information to be digitized and accessible to the AI. And so I think that's kind of the biggest difference is, or that's one of the biggest issues anyway, is data security,
Yeah.
data privacy, and data custody. And um, I think seeing Apple kind of identify that and build their own. I mean, they should just use blockchain for that last part. But it's really it's not just me. It's not just us saying it. It's a multi-trillion-dollar legacy company saying it. So I'll pause there. But that's kind of one of the early kind of low-hanging fruit in which these decentralized blockchain applications have an advantage over centralized.
Yeah, definitely. And like data ownership, transparency, and potentially giving users the chance to monetize, from their own data. I think that is super interesting. Um, let's talk a bit about use cases and applications. Can you share the most exciting or unexpected application of AI that is being built on Web3 infrastructure? Or maybe an exciting decentralized AI application that you are.
Yeah, something just previously covering the networking infrastructure space, also being a user of healthcare in the U.S. I've always been interested in a way to make healthcare data more composable, if you will. Obviously there are a lot of regulations. HIPAA, you have to be HIPAA compliant on where the data is stored, who has access to it, and by the way, it still gets hacked all the time, and so it literally just makes your life harder. I remember like 2 years ago, I had an X-ray, and I wanted them to email it to me, right? I just wanted, I think I wanted a second opinion. It was broken, and they said it wasn't, but anyway, um, they couldn't legally do that. They had to send me a CD in the mail, and it's just like it's just silly, right? And then every doctor's office that you go into, you have to refill out, basic information. And like, why can't you just have one, kind of database of all your information, and it can be pluggable to whatever either doctor or whatever AI kind of applications come to market in terms of monitoring your vitals, giving you maybe monitoring for a disease or something, or using the hive mind to kind of monitor other people anonymously.
Yeah.
That's only possible. All of those like applications, it's only possible with what I mentioned earlier, which is this provably confidential, secure, and you provably have custody, with your private key and only you to this data, and that can only be done with blockchain orchestrated cloud. And so you're starting to see it, kind of these ideas pop up, and we're getting there. We're not there yet, but this has been something that I've been waiting for like I don't know, almost 15 years, and so it's exciting. And it'll take time to get the regulators on board and have them kind of understand what the implications of using blockchain orchestration means. But I think that we're about to have kind of this explosion in really interesting applications that leverage AI, but more importantly, kind of can plug into this really sensitive data in ways that they can never do before. So, and which again can only be done really with these ultra secure Web3 blockchain orchestrated cloud networks.
Yeah, agreed. Let's talk a bit about the investment landscape. So from an investor's perspective, how do you approach the growing number of, there's a lot of startups emerging at the intersection of Web3 and AI, and also there's this buzzword all the time, like going around agents, 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 agents. And yeah, like what's your perspective on that?
I think in general, and I've been kind of covering the decentralized compute space before DePIN was a term, before Web3 AI you know, was a term, honestly. And so I've kind of always had this idea of how, these composable compute and data modules can kind of work together using Web3 to create, novel functionality not possible in centralized Rails. And so I don't think like that overall thesis hasn't changed. There's just, everything has AI in it now, which is really just, a software program. So we've had software for forever, but it's kind of this, new, more powerful software program. And so, kind of thinking, I like taking kind of a top-down, big picture approach. Like, where's the infrastructure stack today? Where are the bottlenecks? Where is there like early signs of commoditization, all that stuff. And then thinking about, okay, what are the actual advantages, technical advantages, characteristics of Web3 Rails? And then, how would that most interestingly tie into AI applications? So it's kind of, big picture, thinking about the stack, and then I kind of go from there. And so, if I identify that, maybe there's been too much attention on, this area, I think data management, kind of like a data lake, data warehouse, has been completely overlooked by the crypto space. If you look at Web2, Databricks just got a $62 billion valuation on the private markets. I think Snowflake trades at, I think, 60 billion market cap. So those are massive, massive, like key parts of the AI tech stack. And, I mean, I don't hear about it much in Web3. And so, kind of dive into that section, see who's, what tech is interesting. And then, it always comes down to valuation, right? You can make a good investment in a bad company if the value is right, and the opposite is true. And so, investing in both the liquid and illiquid markets, on the liquid side, it's kind of, a lot of valuation based. On the illiquid side, it's kind of getting to know, the competitors on the landscape, hear what they think about each other and how they differentiate. It's actually really interesting when you ask like 4 competitors how they differentiate, and how they're better than others, and getting kind of different answers. And then, you just kind of have build kind of like a thesis on how that part of the market is likely to play out, and then kind of make investments, accordingly. And so, I always think like top down, what's exciting, what's interesting. At M31, we're very conscious on having a full stack portfolio. So, every kind of component from, the hardware, the orchestration, the verification, the middleware, and then the applications. I find that a lot of these infrastructure plays, it's very abstract. Their value, their kind of uniqueness. It's very abstract if you're not like in the trenches of hardware and kind of this technical stuff. And so, but demonstrating, why it's interesting through an application, I think is a much easier way for both projects to kind of demonstrate why they're different. Why no one else can do this functionality because we partnered with XYZ, and then people are like, oh, okay, that's why XYZ is interesting. So kind of dovetailing on that, I have been kind of preaching or very bullish on co-processing for a while, and it's kind of like it's an abstract term, and I don't think it's ever really caught on, but the importance of verifying off-chain activities, people didn't really get it until AI, autonomous Twitter agents came on the scene, and they're supposedly autonomous, no human interaction. But how do you prove that, right? So
Right.
you need verification, and that's basically, a great way to say, yeah, this is a co-processor, and this is just the beginning. And so, that's the value of it. So you gotta, I think, like showing examples and like uh, tangible use cases is the only way to kind of get this tech to catch on with investors, with developers in Web3, but also Web2. Because if you build it, they will come. It doesn't work.
Right. That's true. So what's like one advice you would give founders listening to you, founders building at the intersection of AI, Web3, listening to you today?
Yeah, I think the initial focus should only be the demand side. I
Mhm.
think, if you have a product that people like and people want to use, the supply side kind of takes care of itself. I think a lot of deep in projects or Web3 AI projects, it's kind of like a focus on how many nodes they have, how the capacity, all that stuff, and then it's like, okay, now let's go to market. But really, like, in order like not to waste your time, not to waste investor money, like figure out, even if you don't have the functionality, right? It's running on centralized infrastructure, but we plan to decentralize over time, and people actually use it. Like that's a lot more compelling than something that's absolutely decentralized from day one. You got to answer the why. Like, why are we building this? And it seems really obvious, but not enough people can articulate that.
Yeah.
And also, kind of on the deep end side, which on the Web3 AI side of things, why will people change their behavior to use it? Right? We're creatures of habit.
Yes.
We all complain about Google, yet we still use Gmail. We all complain about Twitter, but so for us to change our behaviors, there's got to be like a compelling reason.
Mm-hmm.
And 99.9% of people don't care about decentralization, probably don't even get it. But it's kind of the implications of the decentralization, whether it's provable, security and privacy, you know, um, or there are a lot of siloed, the large internet companies or tech companies are all siloed, and so they all want to build their own platform of their own kind of chatbot that takes, like, Microsoft wants a Microsoft Office suite, Apple wants to take everything in the Apple ecosystem of hardware. Same with Google, and the advantage of Web3 is that you don't have those. Everything works together. It's composable, and so it's kind of use that as an advantage, right? Identify what advantages Web3 has, and kind of like leverage that to
Yeah.
make something that a Web2 company never can. And
Mm.
so, it's disruptive technology. It always starts off as kind of like these niche, kind of silly use cases,
Mm-hmm.
but the structural difference that a company, by definition, could never own a decentralized network. Eventually they will get displaced, I think, by these more functionality that you can get on, that you can kind of build with Web3 Rails.
That's good. That's really good. Yeah, let's talk about long-term vision. If you were to envision the Web3 and AI ecosystem in 5 years or 10 years, that's kind of long from now. What do you think will be its most transformative contribution to society?
So I think, I'll touch on agents, and I
Mm.
think one of the and DeepIn, and because I think where there's a lot of experimentation, fun having on Twitter and with these agents, and it reminds me of DeFi. There was just kind of like this new idea every day, and kind of building on other people's code and ideas, and so I think it's great. I think we needed something like that. But to me, the most interesting AI agent is kind of like the back end agent that will be able to, you can give it access to value, and because Web3 is permissionless, and composable, it can then go out and buy these digital resources like compute, IP rights to, I don't know, a movie, data, access to a private data, to your private data because you gave it permission from your key.
Mm-hmm.
And you can go out and tell it to it's kind of like intense in that it's, it's kind of, you tell it an intent and it kind of figures it out. But, if I tell an agent, I think this is not that far off. If I tell an agent, I gave it access to my wallet and I say, build me like a generative AI movie with me as the, main character, using, my private data, and tokenize it. And so, it kind of just figures out how to do that with all the pieces. I think that'll be a game changer. And again, something that can't happen on permissioned, non-composable Web2 rails. And so it's kind of like this creator creating, it doesn't even have to be like, the creator economy, but, it could be productivity, it could be a lot of things. I think it's just going to, our capabilities to build things digitally is going to explode. And normies, I mean, I'm an econ and finance double major, so I'm a normie when it comes to like deep AI tech, but just it'll be very natural for anyone to kind of spin up something really, really powerful using these kind of modules and agents that are kind of putting it all together.
Yeah, that makes sense. I keep thinking about like, because as far as I know, agents are not fully autonomous at this point. And I keep thinking about like hallucinations possibility because I think that it's like when you think about healthcare and like what you talked about, even with your experience, I think agents are such like they're super crucial to everything. But then I'm kind of concerned about like identity issues and ethical issues and like how do we trace who is behind a specific agent, and if they're completely autonomous, then what if they're hallucinating and feeding each other like wrong stuff, information and
Yeah.
trickling down and down. But maybe we're envisioning the future where the agents we've sort of solved these issues. I'm not sure which future you're talking
Yeah,
about.
there are things you can put in place, right? I mean, there are a couple things there. Like, is the model good enough, right? The hallucinations,
Right.
as you say. So you can build a model and kind of make it, I don't know about autonomous, but automatic. And then you put a layer on top of that that kind of either, another agent or even human that can, sanity check it, right? Before it kind of, so there are layers you can build until you're comfortable. And again, you probably don't want like a AI agent to be in charge of like pulling life support, right? You probably just want it to like give you maybe advice on it, but like you don't want to give it the access to the switch. And so, that's another thing. It's kind of like they're our helpers. They're not here to take everything over. So I think how you design it will be very important, and people are being very thoughtful about that because we are still early, and
Mhm.
you want to be able to provide a good product over anything else, and so making sure that it is running properly is probably better or more important than complete decentralization. Another thing that comes into mind is malicious actors and hacking. We're going to have access to our health records, financial access, financial information, all that stuff. And so how are you going to trust, verify, don't trust, how are you going to give access to an AI agent if it's not a company, right? A company you can hold accountable. And so that's why you need verifiable
Yes.
AI. And so, there are a lot of ways to do it. ZK, FAG, TEs are probably the most practical way today. But, just being able to verify on-chain publicly that the model wasn't tampered with, the data wasn't tampered with, the hardware wasn't tampered with
Mm-hmm.
is essential to connecting all of these systems.
Yeah, super. So, David, is there anything that you'd like to share with us today that we haven't touched on?